You've made the point that we're actually seeing the asset trade on things like ETFs and inflation and maybe MasterCard and not so much on random tweets from an Elon Musk, for example.
That's right. That's right. This latest leg higher, the latest rally touching, of course, new all-time highs in both Bitcoin and Ethereum and many of the other crypto assets out there. It's all based on real market forces and real market dynamics this time around. It's not the same kind of speculative hype, the same kind of pumping from, as you say, the likes of Elon Musk. Apparently, Elon Musk was tweeting something this week. Personally, I actually don't even know what that was. And so that's an exciting development, I think, for the industry as a whole, that we've come a long way in only 6 months in terms of the foundation that we've laid for this type of adoption and therefore these types of rallies.
Right. Well, he is tweeting a bit about inflationary pressures. So is Jack Dorsey. A nice little debate between them and Cathie Wood on this issue. I wonder how you think the inflation debate is factoring into the Bitcoin trade or the crypto trade. Is it the main dynamic?
I don't think it's the main dynamic. I think that the main dynamic comes back to these market structural dynamics that we talked about earlier in terms of the ETF finally being approved. Of course, that's the Bitcoin futures ETF. You know, that's brought an inflow of money into the space, the likes of which we hadn't seen before. I think it was 1.5 billion in inflows into crypto asset-backed funds last week versus the previous all-time high, which was earlier this year of 640 million. So, you know, that's obviously a massive increase on that front. But look, I do think that these inflationary fears are lurking in the background. And obviously one of the big theses behind Bitcoin, really since it came into existence, is that this is something that is fixed in supply in a way that even gold can't claim to be, and that it is sort of a digital alternative to gold, and there are a lot of investors who are looking at it from that perspective. I do think that it is hyperbolic, to say the least, to be talking about hyperinflation, you know, bearing in mind that the definition of hyperinflation is tens of percents of inflation happening at a very rapid pace and a very rapid pace of acceleration. We've only actually seen hyperinflation in a handful of countries over the last decade. So I'm not really sure where Jack Dorsey is coming at it from that angle. But, you know, he's got his own Bitcoin bags to be talking there. So.
Yeah, I mean, you make a key point. I mean, the context around the definition of hyperinflation, which I think is probably being debated a little bit now, given what we've seen play out on Twitter this week. Jill, the Slow Venture portfolio has quite a number of fintech names in it, including Robinhood, which I know reports after the bell today. But these are also names that are crypto plays to some extent or have exposure to cryptocurrencies. So when you do think about the investing landscape and some of these deals that are getting struck, and of course MasterCard was the one yesterday getting all the attention with Bakkt, are the lines blurring, and is this really where we're going to see the underlying technology itself really put to use in a much more meaningful way right now?
Yeah, absolutely. I mean, all of the lines are blurring, right, between traditional fintech and crypto, even between, obviously, social media companies, you know, whether that's Twitter, whether that's Facebook, blurring into having their own crypto plays. You know, a few years ago, the big buzzword in Silicon Valley and in venture capital was that everything is fintech. Today, everything is crypto, whether that's an NFT angle that companies are adopting, whether that's, you know, adopting infrastructure, building out infrastructure around cryptocurrencies, or whether that's working with and developing their own digital assets. We're seeing that across the board, which is very exciting, of course, for those companies that got started in crypto, you know, many of which got started in sort of the last hype cycle around it, 2017, 2018, because this is all adding just good sort of tailwinds to those businesses. And I wouldn't be surprised if we end up seeing some acquisitions in that space, but also so many of those crypto companies are developing and growing at such a rapid pace themselves that they're actually now the purveyors, the vendors selling into some of those bigger incumbents that you just mentioned as well, which is very, very exciting and a very cool dynamic to watch play out in the industry.